the Liquidity Savings Algorithm for CHIPS, a high-value payment system for US dollar-denominated domestic and cross-border trade and settlement, plays a critical role in the US economy, generating around $5 billion in annual economic value for participants and the financial system from liquidity savings.
Meanwhile, CHIPS, along with other global payment systems, completed the implementation of the ISO 20022 message standards that will meanwhile unlock increased efficiency, enrich data content, and foster innovation for banks and corporates.
And to discuss a new CHIPS Liquidity White Paper that outlines how the liquidity savings algorithm operates, as well as the important role of ISO 20022, we are joined by Richard Dzina, Senior Vice President, Core Product Management at the Clearing House. Welcome, Richard, to Sibos
Delighted to
TV.
be here. Thank you.
It's great to have you here, sir. Now, the US high-value payment market is the largest in the world. Can you set the landscape for us?
Absolutely. Reflecting the critical mass of this market, we're very fortunate to have two high-value payment system operators in the United States. The Fedwire Fund Service, operated by the reserve banks, and CHIPS, operated by the Clearing House. I like to frame these two services as strategic complements to one another, and I think that's true in at least three dimensions. One, resilience. If either operator experiences a disruption, the other is available to maintain the integrity of wholesale payments in the United States and to support financial stability. In orientation, with the Fedwire Fund Service predominantly being a domestic platform, CHIPS predominantly being a cross-border platform, though I would underscore with the reach and capacity to support every domestic payment need through a very robust correspondent banking network, and then especially in our focus today in liquidity management, with the Fedwire Fund Service being a pure real-time gross settlement service, which means all activity on Fedwire funds needs to be pre-funded with balances in a participant's master account at the Federal Reserve. And CHIPS, in contrast, levering a very sophisticated liquidity savings algorithm that mates, nets, offsets payments in real time such that only the net, not the gross, transfers at settlement. One can conceptualize CHIPS as the liquidity savings engine for the US financial system and really the platform of choice for cross-border settlement of US dollar-denominated trade.
Now, elaborating upon the CHIPS comparative advantage, which you've already mentioned a bit, how does the CHIPS liquidity savings algorithm benefit financial institutions as well as their clients? Well,
it really is the distinguishing feature and comparative advantage of CHIPS. The liquidity savings on CHIPS presently is about 29 to 1. That means for every $1 contributed to the network in funding, supports over $29 in settled value. When you extrapolate that across the network at large, it's $2 trillion in daily settlement, supported by a mere, I say mere, $75 billion. And that equates to about 29 to 1 in terms of liquidity efficiency. When you consider the counterfactual, if CHIPS did not exist and that $2 trillion in value had to be routed through less liquidity efficient channels, and you think about what the opportunity costs would be to maintain reserves to support that value of payment activity, and you think instead of the opportunity that participants have to invest those resources in higher yielding assets, we calculate in 2024 that savings was $5 billion in value for our participants in the financial system, and that translates to about $14 million every day. So it's a very, very rich opportunity for our participants.
Don't we all wish we had a mere 75 mil
Indeed.
Lying around
Indeed.
under the sofa? Talk us through the key findings that have been revealed in the new white paper that focuses on the CHIPS liquidity algorithm, if you may.
Well, we are delighted to publish this white paper in conjunction with Sibos and herald some of its findings. And it may be meaningful just to reflect upon the environment from which we emerged, largely defined by the great financial crisis and the COVID era. And that environment was characterized by low rates, even at zero, high reserves, and abundant collateral. And I will suggest that anesthetized many market participants about the value of liquidity savings. But that era unmistakably is over, and we are now in an environment of elevated rates and quantitative tightening. And the value of liquidity savings, we believe, unmistakably clear to market participants and those who have the opportunity to take advantage of the CHIPS network. I would underscore, however, that the value is not limited to economic value. It also is meaningful from a financial stability perspective. And we know that in periods of stress, liquidity is ephemeral and tends to evaporate when needed most. And we therefore believe that our participants are best positioned to respond in periods of stress when they have access to CHIPS and its liquidity savings features. The white paper that you reference also demonstrates an important customer service and operational risk reducing benefit of CHIPS. The analysis demonstrates that the median settlement on CHIPS is about 5 hours earlier in the operating day than the Fedwire Fund Service. That delivers substantial operating risk benefits. The more activity is shifted earlier in the day, the better from an operational perspective. It also means that our customers can recycle liquidity earlier in the day and put it to better use. So, economic value, financial stability value, operational risk reduction, and customer service value. It's all there. But I would even suggest that the best news of all is that both simulation analysis and empirical experience confirm that the more volume and value you throw at CHIPS, the better the algorithm performs. So we still feel that there's a lot of unexploited value to deliver to the marketplace.
Let's shift from liquidity to another hot topic, standardization. I think you saw that coming. Following the implementation of ISO 20022 message formats in the US, how does the harmonization of global payment message formats with the ISO 20022 standards speak to the 2025 Sibos theme, the next frontier of global finance? Where do you see the link there?
So this standardization of high-value payment message formats is something that we've been advancing for the better part of a generation. Could not be more delighted that the implementations are now in the rearview mirror. Would herald our SWIFT colleagues for really being pioneers in advancing this collective interest. And I think what's really interesting, recognizing how critical data is in the current world, the data-rich content and the structured message formats of the ISO standard, when you mate that with the dawn of the age of artificial intelligence, I think the opportunity is really rich in forging that next frontier that you mentioned.
Now that major payments operators utilize the ISO 20022 message standard, how can further benefits be extracted from that standard?
Well, now that we have pivoted from implementation, the focus of the marketplace, our participants, CHIPS as an infrastructure, is very much focused on adoption. And we really want to catalyze that. So the value proposition of streamlined efficiency, enriched data content, structured message formats, and really, maybe most of all, unanticipated innovation around a common message suite can be realized. ISO message standardization is not an end. It's a means to the end. And we want to make sure those end objectives are ultimately realized. We'll suggest that we're really hoping, to catalyze a competitive dynamic across the network, wherein our participants are somewhat in a race, if you will, to provide services and deliver value for their end user customers, corporates, and the like. And we feel as an infrastructure operator, our first responsibility is to establish the foundation around which our participants can innovate and thrive. And we think we've done that with the move to ISO.
It's quite an international gathering we've got here in Frankfurt for Sibos. So can you speak to efforts across the global community to ensure harmonization of global message standards over time?
This is a critical need and interest. It would be very unfortunate if over time we devolved into idiosyncratic implementations of the ISO standard and we lost the value proposition of the new message format. So even this week, on Sunday, there was a meeting of high-value payment system operators hosted by the European Central Bank and EBA Clearing, focused on this very subject about how we can stay aligned over time in terms of our release schedules, in terms of our change management protocols, and the like. And I think we've made great progress on that. It was also a topic of discussion at the market infrastructure breakfast that SWIFT sponsored this morning. So it's on our collective consciousness. I'm quite confident we will meet that challenge.
And final question for you, Richard. With the ISO 20022 implementation in the rearview mirror now, what's next for CHIPS?
Next for CHIPS is extended operating hours. And our first step that we intend to take on this is to frame a Sunday operating session for CHIPS that would open up access to new markets, especially the Middle East, and enrichen the Asian session, and also support new use cases, such as weekend real estate closings, supply chain use cases, and the like. And we have received a positive expression from participants representing about 85% of volume and value on CHIPS to continue this exploration. And equally, I would note, is perhaps the negative business case, recognizing that new technologies, new entrants, laser focused on the frictions in off hours and cross-border activity. And we want to make sure that we maintain the relevance of CHIPS and the relevance of our participants in the brave new world by being a first mover to weekend operating hours. So both the positive business case and the negative business case point in the same direction, and that's toward action. And we look forward maybe to speaking about that with you in Miami next year.
Fingers crossed, pack the sun cream.
Indeed.
Richard, it's been great to have you here on the Sibos TV sofas. Once again, good luck with the final day and a half, I guess, here in Frankfurt. It goes fast, it goes very fast. That's Richard Dzina, Senior Vice President, Core Product Management at the Clearing House.